So you did it. You put in the hard work, you were disciplined, and you saved your first major chunk of money. But now comes the really important question. What's the smartest way to actually use it to change your future? Saving $10,000 is a massive accomplishment. So first off, seriously, congratulations. Give yourself a pat on the back because most people never get this far. Now, let's talk about how to make that money start working for you.
Okay, the cash is sitting in your account. The big question is, now what? How do you take this pile of money and turn it into something that actually grows, something that builds a secure future? Especially if you're kind of new to this whole investing game. Well, that's exactly what we're going to break down.
Here is the one thing you have to understand right away. If you just let your money sit in a savings account, it's like a leaky bucket. Inflation is constantly and quietly draining its purchasing power. Investing is how you plug that leak and start actually filling the bucket up. Okay, section 1. Before we even whisper the word stocks or funds, the very first step is always about safety. You have to build your financial fortress. This is the absolute non-negotiable foundation of any smart plan, and it's what protects you before you take on any risk. So what does that fortress actually look like? It's your emergency fund. Your first job is to figure out your bare bones monthly expenses, and then you stash away 3 to 6 months worth of that. This is your Life Happens fund, and it has to be somewhere you can get to it fast. Why? So a surprise car repair doesn't force you to sell your investments at the worst possible time. With your fortress built and the walls secure, now we get to the exciting part, investing the rest. And for that, we're going to use a really clear, balanced, and actionable plan I call the 40-40-20 blueprint. The entire strategy here is about balance. It's what keeps you from stressing out, and it dramatically lowers your risk. We're splitting our money into 3 buckets. 40% goes to stability, 40% goes to growth, and a super important 20% goes to you. Let's dig into what goes in each one. First up is the 40% stability fund. Think of this as the anchor of your entire portfolio. We're talking about broad market index funds or ETFs, that's exchange-traded funds. These basically let you own a tiny little piece of the entire market all at once. The goal here is not to get rich overnight. It's about steady, confident growth and protecting what you have. For a beginner, this is how you build a solid foundation and sleep well at night. Next up is the 40% growth fund. This is where we start aiming for that higher long-term potential. This bucket includes things like S&P 500 index funds, which track the 500 largest companies in the US, or maybe some diversified mutual funds. Over time, these types of investments have consistently been the engine for building real significant wealth. So, we've covered what to invest in, but how you invest is just as important. Getting the mindset right is absolutely crucial, and the most important part of that mindset is just one word: patience. And here's why patience is your superpower. It's what unlocks compounding. This isn't some kind of financial magic. It's just math. Your money earns returns, and then those returns start earning their own returns. It's like a tiny snowball rolling down a huge hill. It starts slow, but eventually it becomes an unstoppable force. It proves that time in the market always beats trying to time the market. Now for that final 20% slice of our blueprint. This is the piece that is so often overlooked, but it's the one that can provide the highest return of all: investing directly in yourself. Just think about it for a second. What's the fastest, most reliable way to get more money to invest? It's to increase your income. By using this 20% to gain high-value skills, you're not just improving yourself, you're basically pouring gasoline on your entire financial journey for decades to come. And we are talking about real, marketable skills here. Whether it's learning how to code, becoming a master at sales, or understanding digital marketing, these things can dramatically boost your earning potential. That means you'll have so much more money to invest over your lifetime. The return on a skill that doubles your income is practically infinite. Okay, so now that we know what to do, it's just as critical to talk about what not to do. So many beginners lose money not because of bad luck, but because they fall into predictable and totally avoidable traps. The winning mindset in investing is actually pretty boring. It's about consistent habits, controlling your emotions, and thinking long-term. The traps that cause people to lose everything are all about excitement, get-rich-quick schemes, assets being hyped up on social media, so-called insider tips. That's not investing, my friend. That's just gambling. So let's bring this all together and reframe what this $10,000 really represents. It's not just a number sitting in an account. It's so much more than that. Your first $10,000 isn't the finish line. It's the starting block. It's the seed from which your entire financial future can grow. You have to remember, real wealth is built on structure, consistency, and discipline over time, not on luck or some magical shortcut. By following a clear, disciplined plan, anyone can turn this amazing milestone into the foundation of a much stronger financial future. This $10,000 is your opportunity to build something that lasts. So the only question left is, how are you going to plant it?